Hello everyone, Nick here looking at the S&P. So finally today is 18th. We finally made a new all-time high for the S&P. The Nasdaq has done it a while back, like a while back. So is this a game changer? So let's think about it from a technical perspective, from a fundamental perspective, and just from a pure logic perspective. Doesn't really freaking matter except for CNBC because they get to write a new headline. Whether this is an all-time high or not, it's a level, just like any other level. So let's take a look at it. So this was a failure level right here. What is this? A daily chart of the SPY. So it's the ETF for the S&P. SPX is the index. This is the ETF. So right here, we had a potential rally that failed, and then they came back to it. They failed again. They came back to it, and then they broke through it. And the next thing they do is they establish it as a floor. So that becomes a pivot zone, and then they start building up from there. So having just reached a prior failing point doesn't mean that they're going to burst through it. They could, but usually they don't. They breathe a little bit, test it again, try to do it again. That's how you get the double top talk. And then they say there's no such thing as a triple top, which I have no idea what the frick that means. But I mean, I know what they mean, but I don't know what it means in real life. So I watch it until, so if it does dip, where it falls is important. So if it does dip, don't panic and start buying puts at 327 because that's where it's going to find support-ish. That's the prior fail point that they would be testing for footing. Totally normal. And it's a zone. It goes down to 319 and change. So it has support, so the bulls are still in control. That's why you get the higher lows. So don't be freaking out just because the headline says, oh my God, all-time highs, and start buying calls like you wouldn't believe, and then the next 2 days it start falling, you bail out of your calls, and you start buying puts, and you're just doing exactly the opposite at exactly the same time, all the time. So use logic. So here's another piece of logic. So this is where we were going to the moon, and then, all hell broke loose. Somebody ate a bat, and then this happened. So we come back to here. Why should we go higher than here? Because all the shit that caused this is still here. We still have the virus. We still don't have a solution for it. People are still freaked out about it. Not me. I'm against wearing masks because the only way to fight a virus is to actually face the virus. So if you're healthy, why are you freaking hiding? So everything that's wrong is still wrong. The airlines are still in deep bandini and on the verge of going out of business, and they're barely burying themselves in debt. They still have virtually no sales compared to last year. The hospitality industry is still very hampered. The cruising industry is hampered. Anything that has to do anything with crowds is hampered. Businesses are not going back to the offices. Can you imagine the problem that's going to come out from the commercial real estate? What banks own these loans? Who's on the hook? What company owns a lot of real estate properties that are commercial? That can't be good. All of my friends, almost all of my friends that have regular jobs are not going back to the office. None of them. So that's a lot of empty cubes. And what is it? $700 a cube? $1,000 a cube? How many people? It's a lot of money that's going to disappear from the economy, from the people that hold these offices. So there's going to be a shakeout there. Does it carry out to other industries? I don't know. I haven't thought about it yet. It's impossible to cover all angles. Some of it is good. Like if you open the grocery store just before the pandemic, you're sitting pretty because you have more business than you can handle. That's why Walmart is doing what it's doing. They stopped taking returns on a lot of stuff. Talk about cost savings. Walmart, yeah, I can't take your return because of COVID. Okay, so you can't leave it on the shelf for 3 days before you touch it and eliminate the COVID risk. But they take that position because it saves them a shit ton of money. So it's just easy to get caught up in the headlines. Logic says we just set a new all-time high. It's not a big deal, just another level. But it tugs at the heartstrings. So logic says that we could fade a little bit. It's not the end of the world. CNBC comes out, oh, we usually get 5 to 6% drop after hitting an all-time high. First of all, nothing usual about these days. So saying usually, you should stop listening. His first words comes out of his mouth, Pam Pam Pisani, usually. You don't know anything about anything, my friend. So he just regurgitates whatever he hears somewhere else. So yes, okay, we can fall. It's fine. But the reason why we're falling is to checking for footing on the neckline that we just took out, which was at 327. And it's got a better base under 320. And an even better base under 310. And guess what? Even if we fall to 299, not the end of the world. Even to 291 is not the end of the world. This is the point of control. This is exactly where most of the trading happened for this period of time. So the volume profile suggests that there's a lot of support. So if you're a bearish, I'm bearish just from the fact that everybody else is bullish. It's not like I was bullish when everybody else was bearish last year. I was saying buy the dip, Amazon, buy the dip down to 1500 or whatever it was. So now that nobody's watching below, I get nervous. It's like a car full of people and nobody's watching the wheel. Hey, somebody needs to look forward. Otherwise, you're going to strap on your seatbelt and it's just going to happen. So if we dip, it's not because calamity is coming. It's because it's just normal price action. I'm going to say something that's going to blow your mind. I learned it from friends that trade the futures. And they say headlines don't matter. It was a tough sell for me. It took a few months, but trust me when I tell you, very, very, very few headlines matter. Only 3 that I can think of right now. The one is the shutdown, the quarantine, clearly. That changes the game. The second most recent one is the 2018 December Fed flip, when they said, wait, did we say raise rates? We meant to say, no, completely the opposite. We're going to take rates to 0 and beyond. That was a headline that changed the game because it provides liquidity in the market, which actually is one of 2 or 3 things that's necessary for a market to rally. Sentiment is the other one. So it provides liquidity, flips sentiment on a dime, changed the game. Same thing with 2016 with Trump's election. Believe it or not, Trump is really good for the stock market just from the standpoint of sentiment. People supposedly hate him, but half the country voted for him. So all of y'all Trump lovers, get out of the fucking closet. So not everybody hates him. He might be crass, but he's not evil. So ignore the headlines, trade the chart. I'm sure I pissed off a few people by saying that. So here we go. Good luck with your trading. Nick signing out.